morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we continue our individual investor series focusing on the different types of risk profiles and different types of investor profiles in trying to enable investors to make a better decision when it comes to building their portfolio. Now, last week we started our series looking at the conservatively minded investor. That is the investor that looks at lower risk options and focuses on capital preservation. Today we get to the so-called moderate investor, someone that would ideally be looking at a balance of some conservative options and more aggressive investment options to generate a little bit more in terms of income generation, or in addition to income generation in the form of capital appreciation as well. So let's get straight into it and looking at those different types of investor profiles. Well, again, in that highlighted red row, today we're focusing on the moderate investor. And in terms of investment characteristics, we see that in terms of risk tolerance, the moderate investor has a more medium level risk tolerance, willing to take a little bit more risk and willing to accept greater fluctuations in their portfolio value and their investment value in the search of greater returns and building of that wealth over the longer term. Now, in addition to income generation, there should be capital appreciation. The moderate investor is seeking, in addition to that income generation, some additional means of capital appreciation through investing in securities such as equities. And we'll get into some of those specifics very shortly. The time horizon is generally a bit longer, again, to be able to weather some of those economic and market financial cycles. And the liquidity requirement, that is the ability to quickly convert their portfolio from investment securities into cash, is typically lower for the moderate and indeed the aggressive investor, which we'll focus on next week. Now, in terms of this stage of the investor life cycle that the moderate investor would fall into, well, the traditional guidance is that would fall somewhere between the 40-year to 60-year categorization. And why is this the case? Well, to enable investors, the moderate investor, to have a longer so-called runway to recover from economic and market financial cycles that do occur from time to time when investing in riskier securities or investments such as equities and perhaps investment-grade bonds that are not necessarily government or government guaranteed. So it's just a general rule of thumb, but perhaps the moderate investor would fall somewhere within that 40 to 60-year category. Of course, again, based on taking a risk through the lens of risk tolerance, the moderate investor could be at any particular age or stage, but the traditional guidance, again, as mentioned, is between that 40 to 60-year categorization in terms of age. Now, when we look at the moderate investors' options, it gets a little bit broader from the conservative investor. Viewers will recall last week, the conservative investor was pretty much limited to repos, fixed deposits, income mutual funds, and some investment-grade bonds, as well as a smattering of dividend-yielding stocks. The moderate investment or the moderate investor, their investment option broadens a bit to add, in addition to those conservative investment options, the value stocks, balanced mutual funds, which comprise a ready-made portfolio of both fixed income or conservative investment options, as well as some of those riskier stock building blocks, as we mentioned here, value stocks, dividend stocks, some investment-grade bonds. And of course, we move into this slightly higher risk options as well for the moderate investor, equity mutual funds, as well as index ETFs for those who want a broad equity exposure with some level of built-in diversification as well to equity markets. Now, the moderate portfolio allocation, it does vary from the conservative portfolio allocation, of course, with a greater degree or a greater allocation of that portfolio focused on both bonds, with 45% in this sample portfolio, and investment-grade bonds in particular, and even higher allocation to equities with a 40% allocation in this particular sample portfolio. And that allocation is really taken away from, relative to the conservative investor, the allocation that would have been placed into income mutual funds, as well as repos or fixed deposits. In total, that allocation to income mutual funds and repos or fixed deposits just amounts to about 15% in this particular moderate portfolio sample allocation. Now, what does that mean in terms of returns? Well, taking a look at the historical returns of equity indices such as the S&P 500, as well as the Trinidad and Tobago Composite Index, with accounting as well for the dividend distributions that would be on average generated from those equity investments, plus that investment grade bond returns on average. A moderate investment portfolio would give us a return historically of just about 5.25% when added to the current interest rate environment for the more conservative investment options. Now, how does that compare in terms of building real value or increasing your wealth over time? Well, compared to the 5-year average in TNT inflation rate of 2.8%, again, it does seem as though we are beating inflation, or at least historical inflation, with the moderate investor portfolio allocation of 5.25%. And viewers may recall that last week when we looked at the conservative investment portfolio and that sample portfolio, the conservative investment portfolio would have generated just about 3.7 to 3.8% in annualized returns. So in return for taking that additional risk, at least based on historical performance, the moderate investor portfolio does seem to generate a little bit better returns for the investor over time, notwithstanding some of the fluctuations in portfolio values as we move through different market and economic financial cycles. So food for thought, and next week we conclude our series with the final investor risk profile, of course, the aggressive investor. And that's it for this week's edition. For more information, you can give us a call at 226-8773 Bourse. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.